The views and opinions of this program are those of the host, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading.
For over 95 years, we've set the bar. Power, we restored it. Protection, we reinvented it. Record yields, we redefined it. If there's one thing we know at FS, it's that just because something hasn't been done, doesn't mean it can't be done. We're never satisfied unless we take your farming operation to the next level. Run your equipment at peak efficiency and bust the bins this season. Visit fssystem.com.
Well, as we take a look at Tuesday's trade action in the market, saw a late round of buying in soybeans and meal that helped move those markets a little bit higher on the day. Corn and wheat, though, under some moderate pressure as we watch these markets largely just kind of drift in the grains. Cattle tried to recover after a really bad day that we saw on Monday. We're going to talk about all of that and more. Joining us here on today's program, we welcome back Jacob Burks with agmarket.net. Jacob, always good to have a conversation with you, my friend. I hope you're doing well.
Hey, it's always good to be heard, right, Jesse? Yeah,
exactly.
So have me on.
That's the spice of life, man. Always good to be heard. That's the thing. Well, so you're throwing me off my game here. Okay, let's dive into the markets. Overall, looking at Tuesday's trade, as I kind of mentioned, let's start the grains.
Sure.
Kind of mixed. I would say it just felt like the market, we couldn't figure out what direction to go outside of maybe some late buying in soybeans and meal. Was that kind of how you felt on Tuesday, just largely mixed and looking for direction in grains?
It almost felt like what the big picture has been telling us. Ample supplies of corn, ample supplies of wheat. We're a little bit tight on beans. And I feel like the direction of the market kind of trended what the overall direction of the market really is. You can boil everything down on a day-to-day basis and you're going to have a headache. You know what I mean? So when you look at the news that's hitting it, it's basically soybean meal. What's needed right now in the globe, and it's the soybean meal, and they led the way. I mean, with $13 higher in the front month contract, they need it, and they need it now. We're short.
Well, and that's the thing is that looking at meal, there's a lot of talk about expanded crush and more. And to your point, we're tight on soybeans, and I think you did hit the nail on the head, Jacob. Is that with this way this grain complex is shaping up? Last week we tried to test through some moving averages and we couldn't do it. And so now it just it goes back to the fundamentals that we've known for quite some time. And that's largely what it feels like we're going to be trading here for a while unless we get some sort of black swan type event.
That's what risk management is for, is with the stuff that you don't know is going to happen, right? But if you'd back up and look at this soybean complex and think, okay, we're gonna need more soybeans because of the anticipated crush that we're going to produce here in the United States, and when we're seeing that in the different areas, what basis levels are doing somewhere in the east central Iowa. I mean, it's been strong with some increased capacity there. But you would also say, man, we're gonna if we're crushing it for the oil, we're probably going to end up having an ample amount of meal. But with Argentina, not being able to produce what they need to, and they're the ones that are usually supplying the globe with soybean meal, and you're continuing to see dryness down there. That was that's kind of shaking the market up a little bit. And there's been some we're going to end up having probably record exports of soybean meal, and so like when they come to buying, that we're seeing what their need is right now, and it's obviously in the front months here of that soybean meal contract. So.
This is our big window for exports for soybeans. How concerned are you about the water levels on the Mississippi River being so low? Also, the St. Lawrence Seaway, we got a strike there. So there's another shipping route that's out of the equation. We're moving a fair amount out of the PNW, but how concerned are you about all of this, all the trade logistics we have right now in terms of this soybean market? Because I think the soybean market, this is that time of year, that market could probably get impacted the most out of the grains,
Sure.
Jacob.
Sure. I mean, we actually, I leave that to the professionals at our JSA team, the commercial guys. I mean, that's something, an everyday conversation of the logistics of it. The one thing that you can boil it down to is it's almost a good thing we don't have a huge export program right now, because where would they go with it? The PNW was rumored last week that we were selling some corn and wheat out to China. That didn't really come to fruition.
Mhm.
But if we had a large export problem, program out of the Gulf right now, man, there would be more talk about this, and there would be more concern of it. But since we're not, screaming boats down the Mississippi right now trying to fulfill that, it hasn't been that big of a talk. I mean, locally, we're right here, 20 minutes from the Mississippi River. Their basis is weaker than normal, but nobody's, they're loading what they have contracted, but it's not been a huge drive. That hasn't been our market. We've had to find other ways to get it on rail or to get it over to processors. So I would say how big of a problem it is in the grain world right now. It's probably another reason, another justification why you could probably see the USDA take some more soybeans and corn exports out of the balance sheet in the next report.
So I look at soybeans, and I'm staying on the beans here before we talk a little more corn and wheat, but just risk management thoughts here. I know Novi beans within 5 cents again of $13 on the board. You mentioned basis levels, maybe a little softer, but okay at some spots. So you look at harvest, 76% done as of Sunday. If I'm a farmer and I've been looking at, getting stuff off the combine and thinking, do I want to on-farm store this? Do I want to sell it off the combine? Risk management. Talk to me here in this soybean market. What am I doing at this juncture? Because we're still, 12.90, 95, 13 Novi beans are looking at January. These are still pretty solid prices on the soybean side.
Yeah, your soybean opportunities look most attractive if you go to January. So your percent of margin or your percent of interest that they're paying you here is probably best if you can hold that to January. I think the spread right now is right around the 15 cents. Look at 20 cents, like 19 cents of carry right there to hold it to January. So the market's telling you we don't want them now. We'd rather have them later. Just like the opposite of what we've seen over the last couple of years, where they wanted your beans and corn both now. But in soybeans, if you could hold it to January, that'd be the most attractive month to be contracting. Now, logistics wise, and for all the other reasons why most people deliver beans at the beginning of harvest and then store most of their corn, just from a quality standpoint, a lot of times, I would have no problem with that. I would take a look at basis, look at the interest that you're going to have by holding them to January. But the main thing I would look at, beans has a story. If you look at corns and wheat, we talked about that earlier. That it's there's fundamentally we have ample supply. Beans were a little bit short. So that's the market that I would look at. What kind of re-ownership strategy do I want to put in place as I'm taking these beans to town, as I'm getting my cash for them, putting it in my pocket? Really, when you look at margin requirement on a contract, it's very minimal when you compare to what you're putting in your pocket. And then I would probably be encouraging guys to look at some call spreads as well out into the Jan to March timeframe.
We're having a conversation today with Jacob Burks from agmarket.net. Jacob, let's talk corn now. Same kind of question. What are we looking at risk management wise? I know Dees corn couldn't hold that $5 mark. Now we're back well below it, like $4.84 at the close on Tuesday. So as you look at corn, March is closer to $5. I mean, we got some attractive options out here too, but what's your take in this corn market? Are we being a little more defensive than soybeans? What are we doing in corn right now? What should we be doing?
It's always hard to talk risk management when you're talking harvest risk management, because you got so many different avenues. Every producer's a little bit different, whether you got the storage, whether you're paying for the. Right now, I don't think I'd be a very active guy that's paying for a whole lot of money for storage with costing the interest cost. You have to sit down and look at what's my interest cost, what's it costing me to store it, how much carries in the market. What's basis levels anticipated on doing. So all that comes into fruition. But I look at, what can I do to have a $5 floor and probably end up, and I don't encourage everybody to do this, but I don't mind looking at what can I sell, what kind of call can I sell on top of it to just give me a window of opportunity there. And so, March obviously is just like the January contract. If you look at the most attractive spot to sell the corn, you're probably looking out into the March to have the best percent of what your interest cost is. To make that sell. So that's first of all, if I'm looking to sell, I have storage, I'd probably be looking to sell some March contracts. If I'm not, I think it's very important in this type of environment. I mean, we can talk cattle here in a little bit, but you can just look at that chart to realize what risk management in the midst of a bullish market, in the midst of a very attractive market, we just you can see this market fall to a point where you can't explain it. So I'm storing the corn, I definitely would have some type of strategy like that out into the March where I have some type of floor to that I can count on and let me sleep at night.
How about the wheat side, real quick, too? Any thoughts in any three of the complexes? I know Minneapolis spring wheat has been probably the stronger of the three the last couple of sessions, but Chicago wheat's had its moments too last week. So, talk to me about wheat overall. Any big notes you would share there?
I mean, we can. The market's very numb to what's going on in the Middle East. The grain corridor seems to be working its way out. It's almost become the new norm. So therefore, any stories that you can create, any stories that you can think of, has been talked about. So you're probably looking at some black swan event to help with the price of wheat. I think in the both soft wheat, hard red wheat. I mean, right now you're seeing, I would say, decent moisture come across the plains. So I mean, there's no story building like at that level to where have to have your fingers crossed and hope. I think the best play there is to be aggressive, making the sales. If you've got wheat still in the bin, look at opportunities to have it. And if it bothers you to get rid of it, then we just look at some call spreads out there, probably December, March, sometime at that time frame.
Okay, good deal. All right, let's talk cattle. I know you've been waiting to talk about this with me.
Yeah, I got to go real quick.
I was going to say, I know we don't want to talk about this, but what an ugly day on Monday. I mean, you just looked at it. We saw that cattle on feed report come out Friday afternoon, very bearish. You get to Monday, end up finishing limit down a lot of live and feeder cattle contracts, then turn to Tuesday, and we were kind of just mixed. We tried to be higher, then we ended up around unchanged. So first off, I guess your thoughts on that big drop on Monday. Is this the long anticipated, here's the top and here's the market correction in cattle? What do you think, Jacob?
To look at what the correction was looking at. I mean, everybody had talked about, I mean, that was the talk that we're looking for a correction. There's going to be a correction. When you go back and look at what happened just in your April, February live cattle contract, we had somewhat of a correction. We were actually on the tail end of it. We had guys, looking for call spreads to protect what they've sold. We've got guys, wanting to get out of some of their hedges. And so that was anticipated. I think the market was kind of, was accepting of what we had already seen as a correction. If you go into that cattle on feed report that was on Friday, we saw the market, had 2 days down. I wouldn't say violently whenever you look at what happened on Monday, but we had a pretty good pullback going into that report. And you go back and look at a lot of the cattle on feed reports that, we're able to see what's going on in the cattle market pretty good. I mean, with what's going to be, with what's being killed, with what we think is going into feedlots and the reportable positions, that whenever you see, that going into that cattle on feed report, I was anticipating the market had already figured out what happened to the point where come Monday morning, I really didn't know what to expect. I was prepared to see a big move down because that was a very ugly number. I mean, I'm sure y'all have covered it very well on here. We don't need to rehash those numbers. But the large placement numbers, not as much disappearance. Total on feed was the second largest ever. And so all of a sudden you anticipated a downward move, but it wasn't going to surprise me if we'd have found a recovery because I felt like the market already, put some of that into the negativity. And whenever you've seen how it reacted and how it just kept selling, I was really, kind of surprised, I guess would be the best way to do it, that we just, we kept that pressure on it. And then going into today, we cleaned everything out pretty early. Look, it felt like some of the early stops were hit, and then we bounced. We actually went $2 higher at one point, and then the violence really just that's when I feel like the market really suckers some people into just, okay, this is the traders getting back in, jumping back into long positions and just getting hit again. So the way the market closed today almost leaves me more questions than answers for sure.
Well, and thinking about this moving forward, I mean, we were at highs for so long. So it's, every market that goes up eventually is going to probably come down. I mean, that's what history's taught us anyway. So, one has to wonder, depending on how this week goes, if we can find some sort of footing. Maybe this is our new range for a while. It's hard to say, but you got to think about, domestic demand too, getting into the holidays. We've talked about this, credit card debt's high, everything else, how many people are going to be buying steaks and beef and prime ribs for the holidays? I mean, there's a lot going into this cattle market too. You think about the cost of corn, maybe coming down a little bit. So feed costs and more. I mean, there's a lot to take in here. I think I'm with you. I'm not going to say that necessarily this is the bottom falling out, but I think overall, this cattle market really just bears watching this week, especially to see how it acts.
Yeah, we've talked about the demand side of this picture. We talk about it, but there's really been nothing show up that's hurt it, right? So we know the supply side, what we've seen on and just pure available cattle out there. A couple of things happened on what we saw placed. You saw some pasture conditions, the late August into September get really bad, right? So we put some cattle into the inventory or to the feed yards. You also saw a lot of imported cattle from Mexico, much larger than normal, and some imported cattle from Canada. So you had a lot of things going into that large placed number. So what we're going to end up seeing from here on out is some lot less placed and a lot less available cattle to be on feed. A couple things to note of is that when we saw in October 2020, when we saw the on feed number, the largest on feed number ever, we did nothing but rally from there on out. Okay, so I'm not trying to predict that, hey, this is what I'm just saying that, hey, the market we can recover from this level when we know the inventories are going to inventory cattle, they're just not there. What we have on feed now is like 230,000 more heifers than what we had in 2020 when those numbers were big. So the heifers are in the feedlot. They're not rebuilding that herd. So there's still a bright future, an optimistic look at what this cattle market can do next year, going beyond. What we have to wonder now is like, how damaging was this chart? How damaging, what are the complementary products doing out there? Is that something that we're going to be able to go into this holiday season and what are the turkey prices doing? We've heard the avian flu that's going around a little bit. How damaging is that to our supply? What's that doing to prices? The last I looked, it wasn't hurting them near as much. I think we're 34% less price on just turkeys right now. So going into that season, so I think that's the biggest question: is what does domestic demand do as we're trying from a Fed policy rate, trying to create a deflationary time frame? How do we? We knew that it's going to be hard to continue to afford this beef prices, but I mean, we just saw cattle fall. What are we now? $25 now from the highs and the fats, and looking at a cash price that has fallen slightly, and you look at box beef price today still trading at 305. So I mean, there's still a lot of questions. There's a lot of things to figure out in this market's markets. That's what market's job is to figure out what the price of these cattle are.
Definitely. I'll throw hogs in here too before we wrap it up. I mean, you look at, you mentioned complementary markets. Well, there's hogs, but I mean, we're down here at lows that it feels like we almost got to find support here around $65 in the lead month. I mean, to me, that's what it feels like anyway. What's your take as you look at this hog market in general?
Man, I tell you what you just said here is what I've been dealing with all day long. Is you feel like we got to find a bottom, and if the crude oil didn't teach us that a couple of years ago, you don't have to find a bottom. I love to think that too, but I think from seeing these type of moves in these markets where we think, hey, these prices, producers can't make money at these levels. With the hog market, being trading down below 70 in February now, it's something that we should. There should be some support down here. There's a point to where there's going to be packers can afford to come in here and be very aggressive, with whatever margins are due. But the problem is the cutout's been coming down as well too. So we're not being led by the products. So I still continue the approach here that you still have to produce, or this producer still have to protect that bottom side of this market, because even though the charts say, hey, we could find some support in this level, it's just it hasn't proved that it wants to right here.
Jacob, any final thoughts before we let you go here today? Anything you want to mention or reiterate to folks?
Oh, I mean, I talk risk management because that's what I do. That's what I talk every day with the producers, and these type of economic times, these type of geopolitical times, Argentina elections, all these type of stuff, it creates uncertainty in the world and in the marketplace. And that's what these markets, these tools that are available, gives people opportunities to decrease that uncertainty. And I think that's very important, not to use everything and not to be try to sound like a broker, but there's tools out there for you to understand and be able to know how they function.
Well, I know if folks have questions, they can reach out to you guys there at agmarket.net very easily on the website, find the phone number, look at your guys' intel. A lot of great ways to get in touch and learn more. Is there, Jacob?
Yeah, they can even come to Nashville and see me and you both there down there in February. But no, look at our website. We do a free trial. We'd love to walk you through it. Just show you what we got, show our information for 30 days.
Definitely. And that conference that Jacob alluded to is coming up in Nashville in February. And I know the details are also online at agmarket.net. Jacob Burks, agmarket.net. Always good to chat with you, buddy. Thanks for joining us on Market Talk today. We'll talk to you again soon.
Hey, thanks for having me, Jesse. Appreciate it.
All right. That's going to do it for Market Talk. Find us online, markettalkag.com. I'm Jesse Allen. Have a great afternoon.